The simplest litmus test is, and I've traveled to over 100 countries personally, if you land in any country, I guarantee you the people who are interested would know the value of their currency versus the USD.
Welcome to Brave. Learn from Southeast Asia's best tech leaders. Build the future, learn from our past, and stay human in between. No BS on success. I'm Jeremy Au, venture capitalist, serial founder, Harvard MBA, science fiction nerd, and dad of 2 daughters. Every week, we debate startup news, interview changemakers, answer listener questions, and share personal insights. Join our movement of over 40,000 members and get transcripts, resources, and community at www.bravesea.com. Stay well and stay brave.
Hey, I'm so excited to have you back on the show. You are now a founder again after 10 years an executive after being a founder before. Could you introduce yourself?
Sure. And firstly, thanks for having me back after maybe 3 years. My name is Raagulan Pathy. I'm the founder and CEO of Cast. Cast is a bank alternative platform. Think of it like a fintech, and it's built on stablecoins. And it extends upon what I was doing most recently in my corporate role, which is running Circle's Asia business. Circle is best known as the issuer of USDC. Recently popular because it just filed to go public this week. So that's a little bit about me. Prior to that, I worked at Zoom, Facebook, and Amazon. And before that was when I was a founder, like 10 years ago.
Yeah, people can check out that episode to talk about your prior history as a founder. This is kind of a sequel episode, so we can understand. What's interesting is that at that time, it was very much the crypto winter, the FTX implosion, the Terra, and so forth. You were the general manager for USDC's Southeast Asia and Asia business. So, what's interesting is that between now and then, obviously, there's been 2 major trends. I mean, obviously, there's crypto. Of course, the second part is macro. And the third part is your role. But let's talk about your role first. From your perspective, why did you decide to say, hey, I want to be a founder again?
I think the thing for me is just whether I'm in a corporate role or founding a company, it's about solving a problem that's big enough. I'm a pretty big thinker. I think quite long term. I'm not really too concerned with things that are short term. Although in certain circumstances, like working at Zoom, things became very short term because of the pandemic. I had a wonderful time at Circle. I was there for 2.5 years running the Asia business. But it also had challenges in terms of just I had to be on the road a lot. Some years I traveled to more than 20 countries. I would spend more than half the year, 3/4 of the year on the road. That comes with other challenges to your personal health. You don't get to spend time with family and friends as much. At a certain point, I felt financially secure, but I didn't have opportunities to control my time. So first I actually set out to figure out, okay, how do I control my time? And I'd done a few seed investments that lasted very abruptly short, extremely short, like literally a month or 2 before I was like, okay, let's go and build this. I think because I was so deep in stablecoins, I could see that there was this enormous opportunity, which I'll talk about in a second, about what we're building for. That was just too good to leave alone. And there's also a window of time for startups where there is like a tectonic shift in a trend that means that you've got a lot of tailwinds for what you're building. And I've just thought that moment in time, if I waited 6 months, it would just be gone. Someone else would take the spot. So I had to move quickly.
Yeah. Let's talk about this opportunity. What is the opportunity that you feel and believe exists?
Yeah, so today, if you live in a place like Singapore, Australia, where I grew up, maybe the US, you live in a place where banking mostly works pretty well. It's not perfect, but it works pretty well. But that's not the case for large parts of the world. From a macro point of view, there's things that are clashing. Like finance is largely local. You think about when you sign up for a bank account, they ask for your local credit history. They ask for your local ID. It's not very global.
Right.
But if you think about the internet started, realistically like 30 years ago. 1995 approximately is when it started getting popular. And that has changed a lot of things around the world, right? Companies are born global first, as platforms like Zoom and subsequent platforms like Deal and Remote showed. People are trading goods and services around the world. They sell online. You hire people globally, freelancers. There's influencers. There's so much that happens globally on the internet. But that openness of the internet, which is essentially connected globally minus certain pockets like the Great Firewall of China. It doesn't match how finance runs. It's fundamentally mismatched. The thing that stablecoins did was they provided an internet layer for money. Bitcoin was the original blockchain-based layer, as well as a bunch of other crypto. But the issue is a bunch of the other crypto is largely volatile and asset-based and speculative. Stablecoins, 99% are backed against the US dollar. It's something people already understand. There's already 22 trillion of money supply in the US. If you add offshore, notionally it's about 40 trillion or 50 trillion globally. The beauty of stablecoins is that it's money accessible to anyone. Doesn't matter what passport you or what your residency is. It's on-chain. It's one-to-one to the US dollar, and you can send it to anyone to open an account like you would a bank. All you need is a wallet. And so that, I think, is matching the speed and openness of the internet. In many ways, it's a much better fabric for money around the world. And I think, so stablecoins, the largest USDT and USDC, I obviously used to work for the issuer of the second one, but I felt that there was an opportunity to build a whole new type of bank or bank-like platform on top of this layer, that's increasingly getting bigger.
Right. And I think that makes a lot of sense. I mean, obviously, technologies stack on one another. So let's talk a bit about the banking infrastructure. So, what does that look like for a consumer? What would it look like for somebody in, for example, Latin America? Like, would that banking experience be different or better because it's based on a stable coin rail rather than, fiat currency?
Yeah, I was just in Latin America. In most countries in the world, there's approximately 180 countries. Probably like 40 of them, you can say most of Europe, particularly Western Europe, US, Canada, Australia, New Zealand, Singapore, Hong Kong, UAE, things run okay. Open economies, you can send money most places you want, etc. But actually, the majority of the world doesn't have that. They have restrictions on how much money they can send in and out of the country. Sometimes you put money in the bank and the government may nationalize the bank and potentially take your money. They have issues with currency depreciation. The best example of this is when I went on a trip to Thailand, I met some Argentinian guys. It was just after the Argentinian peso depegged from the US dollar. It was 1-to-1. This time when I went to Argentina, it was 1,200 to 1 to just show you what Argentinians have suffered over the last 20 years in terms of currency depreciation. And so having access to US dollars is hugely transformative, and they own the wallet, so the government can't seize it so easily, and a whole bunch of things. And so I think in the context of these countries, it's very, very transformative to their banking experience.
Would it be showing up as I'm able to feel secure about the value of my holdings in this bank?
Let's say you are, firstly, I think, like there's still going to be, for example, people in Argentina who operate in the local economy. You work in retail, in a cafe, someone pays you in pesos, you spend in pesos. But there's also large parts of the economy earning money from overseas. By being paid in stablecoins, they can hold it securely in a bank alternative platform. This is common across the world. You have security of your funds because you have US dollars, not forced to put into pesos, which, the example shows it depreciates a lot. So you have US dollars, you control the wallet. And then with a platform like ours, you can attach a card to it and spend it on Visa rails. You can buy stuff from overseas. You don't have the capital controls. Normally, you'd have to get paid into a local bank. They would convert it to local currency. The currency would depreciate. There's times when banking, you get locked out completely. Lebanon had a crisis where people literally get their money out of the bank.
Right.
And so you avoid a lot of these pitfalls, and it's much more stable and secure. I mean, you can imagine, like, if DBS goes down for an hour or two and we freak out, versus like, imagine they're like, oh, you can't get access for 2 weeks, and then we're going to depreciate your currency. You had $10,000 in there, now it's only worth $3,000. You'd think about banking differently at that point.
Oh, 100%. I'm curious about your geographic selection, right? Because I feel like maybe I would be so basic to be like tier 1, tier 2, tier 3. Tier 1 would be Singapore, America, Canada, Europe, where, banks are up and it's seen as infra, right? I think tier 2 obviously would be your emerging economies where there's a lot of digital banks that are emerging, right? So like Brazil, Argentina, LATAM. But then there's tier 3 where the infrastructure is totally broken, right? So there's some countries in the Middle East, countries in Latin America where it's just broken, right, in that sense. So I'm just kind of curious, do you see yourself playing like in level 2 or level 3? I'm just kind of curious because there's so many digital banks that are emerging for level 2 from my perspective.
Excuse my French, but banking is literally fucked across all three.
Okay, so you're saying,
But in different ways.
Yeah.
Right. And so obviously level 3 is like, banks, you just can't trust that they'll operate.
Yeah.
You need it. Level two is that there's good digital banks in your country, but you still suffer from the bounds of what the government gives you to work with, right? They still you still have currency depreciation. And even Brazil, the currency has been depreciating, not like Argentina, but it's been depreciating 5-10% every year. You have issues of currency depreciation. You have high interest rates. And so you still have problems, even if the experience is digital and capital controls as well. You still have that problem. And then you go to the tier one countries. And I think in the tier one countries, they've just made banking difficult over time. When I first came, actually, like when I opened my TBS account in Singapore, was before I lived in Singapore. Lived in Singapore 12 years now. And before that, I had a company based in Singapore for a business that I had. As part of that, I opened a business account and a personal account. That's how I got my first DBS account 3 or 4 years before I lived in Singapore. The experience then was that I was at the accountant, and then he would send a guy who would do my personal and my business account, and I'd go to DBS and I'd pick up my card.
Right.
There's no way. And I'm not from a private,
Yeah.
because the amount of questions and difficulty. I have a lawyer in the Caymans for some personal affairs. I send some money to my lawyer. I get a periodic review from the bank. I'm like, guys, they're like, who is this? And it's like, it's my lawyer. Why am I under periodic review? I'm just sending money to my lawyer. It helps her with my personal holding company. Nothing complex here. But you're just nervous then. You're like, are they going to restrict my account? And I think I significantly bank with them. So I can't imagine what it'll be like for others. I think banks got worse at facilitating people who are more global. Like I think they're okay maybe with local people who are earning money locally, spending money locally. But as soon as you hit this global profile, they're increasingly struggling with their own internal compliance. It's not a thing against compliance. It's just that they're struggling to understand this new type of customer and build a framework around it.
Yeah.
And so that's why if you have a stablecoin bank, which is much more open and much more adopted to a global user, we think it's just a better experience, even for people in that level one country. Not for everyone, but that percentage who are global.
I think the elephant in the room is that banks are incentivized to take care of customers. The elephant in the room would be governments, right? Because governments are by nature national and sovereign. They are not built for global customers and global transaction flows.
Yes.
They think about their citizens, their currency, their financial infrastructure, right?
Yeah.
So, how do you see that playing out? Governments are also focused on their own fiat currency, and as regulators of banks, how do you see this playing out from your perspective?
My no bullshit version is that there is types of economies in the world.
Right.
There's economies that are significantly large, that they can defend themselves against globalization.
Yeah.
I mean, Singapore's a small country in Hong Kong, but they're like centers with a lot of trade.
Yeah.
Significant large economies like India and China and Indonesia, with large populations, maybe Nigeria in Africa, and obviously the US and China. And there's going to be ones like Brazil and others.
Right.
And of course, the US a bloc. But then you look at all the other countries, and it's really going to become increasingly hard to defend their own currency against globalization and manage all the things that come along with managing a currency. My personal view is that the majority of the world is going to become dollarized. Most people think that dollarization is going, is shrinking. I would argue it's going the other way. It's essentially the basis for building all these currencies already. People think, every country's got its own currency. It's a relatively new concept. Actually, what happened was that gold was the currency, and everyone built the currency off of gold backing. And that stopped at some point in the 1970s, largely. They broke the gold peg. And then people started building their own currencies. And guess what? Unsurprisingly, most currencies, they can't manage themselves because they don't have a big enough local domestic economy.
Right.
And so I think at this point, it's either you go to gold backed, which is not happening right now, or you go to the US dollar. So I think most of the world's going to go US dollar.
Okay, so this is really interesting, right? So first of all, I do agree with you that if you are in a country that has an unstable currency or a currency that seems to be weakening consistently, people are going to want to dollarize to have a more standard piece. I think what's interesting is there's also a big piece about how the world is de-dollarizing as well, because China and Russia and the Middle East can't trust the US dollar because of the US control around the financial system to be able to sanction and do those things.
Yes.
So those are the two types of articles I'm seeing right now. One is you're saying dollarization is going up, and the other one is de-dollarization is happening. I'm just kind of curious how you would explain this for folks here.
So the issues of the world using a currency that's backed by a sovereign
Yeah.
country
Yeah.
is obviously comes with implications,
Right.
including they can turn off, treasury bonds, and
Right.
we've seen some of this with the Russia war,
Yeah.
etc. So it's not without problems, but I think like the view of many countries that their currency is going to replace it is just not realistic. And I use the simplest of litmus tests for this. The simplest litmus test is, and I've traveled to over 100 countries personally, if you land in any country, I guarantee you the people who are interested would know the value of their currency versus the USD. No one knows the amount of people. Maybe in certain countries they'll know the value against RMB, but most won't. Even in Singapore, like you could ask Singaporeans, they'll tell you the value against the USD. You ask them the rate against an RMB, they'll be like, okay, well the USD is this much, and I think the RMB is this, and then you do some mathematical calculation on it. What does that tell you? The US dollar is the accepted global currency for all trade. And so even if governments can maybe do it on a macro point of view when they're selling large amounts of oil, a singular trade, large singular block trades can be in some other currency, sure. But for everyday commerce and usage, I don't think you're going to break the US dollar anytime soon.
Yeah. So I think it's interesting because, when we hang out with crypto folks and when I hang out with central banker folks, I always feel like I'm a little bit on a split screen TV, right? Because what we're kind of saying is there's a group that is more government friendly and saying, hey, crypto is good because we're helping the US dollarize and spread as currency of choice across the world. So I think that's one piece. Another point of view I'm hearing is that crypto is an existential threat against the US dollar as a fiat currency, right? Bitcoin, for example, as a form of digital gold, is a way to eventually move America back to the gold standard by using Bitcoin because America is, etc, not managing his financials well. And then I'll say into two more camps after that, which is that's a good thing that we move to the standard to protect people and move America to a new path. Then I group saying we should be against crypto to keep the US dollar number one. So those are like split screen TV that I'm seeing. And of course, it's very loaded because of this US and geopolitics.
Of course.
But I'm just kind of curious, like, do you believe that crypto or dollarization, do you believe that's positive or negative against American dollar as a reserve currency?
So I'm actually in both camps, but it's actually a matter of time.
Okay.
Today, crypto is 2.6 trillion. Bitcoin is 1.6 trillion. Global currencies are 100 trillion. Crypto is like nothing compared to global currencies. US dollar, 25-30% of currencies, but they're more than 60% of trade. What I believe is going to happen first is that most of these other currencies are going to get trashed and the world is essentially going to become dollarized. Even the currencies that don't look dollarized are dollarized. I would argue the Singapore dollar is almost dollarized. I'd argue the Hong Kong dollar is almost dollarized. Obviously, most of the Middle East is dollarized. Pretty much all of Africa is. Pretty much close to, barring Brazil, all of LATAM is already. And most of Asia is in some way or another. What I mean that is either they use dollars or they fixing their currencies or managing their currencies against the US dollar very actively. It doesn't float in a range that far away from the US dollar for reasons of trade. Whether it's directly fixed or closely linked or just full dollarized, the world is actually already today nearly dollarized. Now we're just going to put it into a digital format and make it more formal and trade, right? Now, the reason why it's unrealistic to think that Bitcoin or crypto is going to overtake this in the short term is it's just the numbers, right? Like I said, it's like Bitcoin is 1.6 trillion, currencies are way bigger. It has to go up substantially a lot before it does. And gold is approaching, I got to check the latest numbers, but close to 20 trillion, So what I think is going to happen is first, dollars are going to expand. Stablecoins are going to go from 50 billion to a trillion in 2028, 2029 probably. And I think we'll march towards 10 trillion some point in 2040 or 2045. The dollars will crush most other currencies in both a digital format. If you manage your currency against the dollar, you've got your own currency, but you kind of don't. It'll be much more explicit. Let's say money supply is 22 trillion now. And by 2040, it becomes closer to 50 trillion. Bitcoin hits $2 million, which I think it could over 15 years from now. Then Bitcoin is worth 42 trillion. Now you've got a situation where Bitcoin is worth 42 trillion. The US dollar money supply is 50 trillion. And you've got gold. And then you've got this situation where countries start to think about it from a sovereign perspective. Do I want to have everything in dollars, or do I create a new currency that is backed by Bitcoin or gold? Because over time, the US dollar depreciates as well. It'd be better to back your currency against something that appreciates. It's just a timeline horizon. I think the world is going to dollarize between now and 2040, and it'll probably reach its peak around then. And then you're going to see that Bitcoin and maybe gold has got big enough that countries will hold a balance of dollars, Bitcoin, and gold, and that's how they'll manage like a new type of currency. And that will happen from 2040 to maybe 2060. And then maybe after 2060, when I'll be very old, things will become much more Bitcoin based over time. So I think both parties are correct. It's just crypto people are in too much of a rush because they don't understand the sums of how big it needs to get before it's realistic. And in the short term, we're going to be dollarizing.
Yeah, we would have to check back on this episode.
Yes.
It could be faster, it could be shorter. But I agree that short-term dollarization is already the king. I think that's a beautiful observation. Most currencies are already hard-pegged, soft-pegged, or unofficially using US dollars. I also agree that it's already happening, that crypto stablecoins are the fastest growing segment because it's just a more efficient way of holding US dollars than somebody trying to hold paper US dollars from a tourist out from Cuba, for example, right? So I agree with you about a short-term dollarization trend for sure. Maybe zooming in on that long-term macro piece. I was talking to this European guy and he said, I can't believe that the American government will allow this to happen because it would destroy their ability to do massive deficit spending, breaks the economic model. So why would the Fed and the SEC be favorable to crypto as a long-term existential threat? And I think that's one part of it. The other part I find is that a lot of crypto people are very public and proud about it, right? So normally, if you're trying to break the American banking system, be pretty quiet and hiding in a cave somewhere. But now everyone's kind of like, oh, I'm on a podcast and I believe that the American banking system is totally broken and we need to break it. So it's very out there as a mission. I'm just kind of curious, if that is true, wouldn't the American government kill it?
The thing that I would tell you is, having worked with American companies for 10
Right.
years, is the relationship between the individual and the government is different here in Asia compared to America.
Right.
So in Asia, it's cooperative. Don't we want our government to be strong? I think most Singaporeans, if you complain about train breakdowns, we want a strong government. But in America, the Constitution is for the individual,
Right.
and individual freedom and individual rights, first and foremost, not the government, right? So it's much more a libertarian sort of view in the US. That the need to have a libertarian view and freedom is much stronger than the need to support the government or to have a strong government. Many sections of the US population, I think, will believe that you don't need government at all. You can just run a completely free market economy.
Yeah.
And all services could be free market.
Right.
And so I think that's just very different. I mean, the concept to many Americans of like, you just pay for your schooling and you just pay for your healthcare. And if you don't have the money, that's your problem. You need to go and make it. That would be shocking to most people in Asia, but it's not shocking to large parts. I wouldn't say the majority of the American population, but a libertarian section of the American population, which is not small, could believe in that. And that's why it's okay for them to speak so openly about screw the American government and the US dollar, because ultimately it's sort of like, yes, we want the US dollar to be strong because we're pro-America, but at the same time, libertarian views, and we think that, excessive government should be very minimized.
Yeah, I think that's super fair. I love that statement that American folks can believe in crypto from a maximal perspective, and they have a different opinion from the government. One thing that's always in the back of my head is, as a economics student, one of the things that we always learned was currencies are backed by force. Currency is a promise of value, and when something goes wrong, there are courts, the justice system, and the justice system is effectively backed by the police and the military that enforce those rules.
Currency is backed by force. That's 100% correct, especially if you're in a large country.
Yeah.
Remember, most of the world's history, currency was backed by gold. Currency came about, first you had gold. It was inefficient to move gold. So you stored it in a bank. And initially, banks would issue IOU notes. That was the initial currency. You had lots of different ones, the JP Morgan one and the Citibank one, the HSBC currency note, which was backed by gold.
Yeah.
Eventually, the government took all the gold and said, now we will back it by force. The time in which currency has been backed by force relative to the world's history is very small.
Right.
And so it's not inconceivable that we go back to a currency that's backed by something apart from force.
currency is backed by force, but more specifically, only fiat currency is backed by force,
Yes.
and gold is backed by gold.
Gold is backed by gold.
Yeah, because that's true. If you move from a trader along the Silk Road from China to Mongolia, to say gold is gold wherever it is, and there's no need for a government to enforce that promise. That's going to be an awkward transitional point.
I think we don't study history that as well anymore. But remember, the gold standard was there till the 1970s. It was only broken in the 1970s, not that long ago, 50 years ago. And for 50 years before that, all currency was backed by gold. All the major currencies, at least. It's not that unusual. And all you need is for currencies, including the strongest of currencies, like the US dollar, to suddenly start depreciating really badly, where people go, oh, you know, like right now, if it happened, you go, oh, there's a few other currency options.
Right.
But gold and other things are not that big. Even now, with a bit of shakiness, you're starting to see gold go up a lot, right? But let's say it got really shaky and the US economy doesn't control the world's power in 15, 20 years' time, then you might need something that's either gold or, if you ask crypto people.
And so let's talk about that future. Let's say this all comes true. Everybody in crypto goes to sleep. You wake up, it's 2040. All those dreams have come true. Bitcoin has gone up. Digital dollarization has gone up. What is that world in 2040 as a result? I mean, you know, maybe one statement that I heard a little bit is obviously people use a lot more crypto for transactions. But what else would be the other impacts or second order impacts of such a world?
What I think is, let's sort of like separate crypto from as the currency versus crypto versus the rails.
Very interesting, yes.
So crypto versus the rails, I think, will become pretty much universal. On that rail, you can put US dollars, which is like USDC and USDT, or you can have things like Bitcoin. As adoption happens, where pretty much everyone in the world has a crypto rails enabled wallet, most of them will have US dollars, but then they're going to have this choice, you know, where they can flip between whatever they want. And so that's what I think will pretty much happen in the world. It would mean that the world becomes much more truly global and matches the internet a lot more, which I think is an exciting future. One of my ambitions in life is to go to space, only because I'm so curious what the world would look like from space. Hopefully one day I have enough money and price goes down to achieve that. But just think about it. If you go to space today, you're sitting on a satellite in a space station, you're looking at the Earth.
Right.
You don't see borders. It's a completely ridiculous concept.
Right.
You know, the concept of borders and countries is completely man-made.
Right.
There's no like lines. We see it on a map that we make, but if you look at the Earth, you don't see any lines. If you think about it from the most fundamental perspective, it's incredibly unfair that your future is dictated by where you're born, the passport you hold, the economy in which you live. As long as you're able to get a decent education and you have access to some basic human rights, right, like healthcare, and you can access digital goods, then you can live a globally first world and participate in a global economy, even if you happen to be born in the wrong country. To me, the ultimate goal of crypto, you can debate Bitcoin or USD, and we spent a lot of time doing that. But the more fundamental thing is that the internet came along. I call the internet the great leveler of the world. It leveled the world. Telecoms wasn't open. Information was not open. It was very much like banking, like siloed country by country. And now we need to do that to finance, so that if you're born in Singapore or Australia, where I grew up, the advantage I have versus someone who's born, look at Singapore, you can drive 25 kilometers away. The salary is 1/3 or a quarter of what it is, just 25 kilometers away, you know. That whole concept can be leveled and should be leveled. And I think ultimately that's why I'm a big supporter of crypto. I want to level it for the world. I want it in a way that anyone will have access to financial services so they can participate in the global economy, independent of where they're born or where they're from.
Right. I think that's a beautiful piece. And I agree with you that in that world, if you're in Argentina or some other country in the world, in the Middle East, you'll be able to access banking services, have a credit score, be able to borrow. And I think it'd be a much more flat space with probably more efficient cost of capital. I'm curious, what happens to the US dollar? What happens to the Russian and Chinese currencies? Because these are controlled currencies. What do you think they would be? I mean, would they have to be more disciplined about how they do their currency? How would you see that play out?
No, it goes back to what I said. I think these large economies are okay. Russia has so much in the way of oil and commodities and large enough internal population, and now having been sanctioned, they've become even more self-sufficient. China, same thing, less on the commodity side, but more internal manufacturing, 1.4 billion people, You could argue that China could pretty much operate as a closed economy. They probably don't want to because it's much better for them to be in global trade. But I think for them, it's less of an issue. I think they'll be okay. And they can defend their own currencies.
Yeah, because Russia and China, they've generally, I think, more balanced budgets on average, and they have big enough economies to do so. So then, everyone's going to ask, what happens to the US dollar in that world? From your perspective, I think yours is a bit more nuanced, I would say, compared to the other folks.
I think the US dollar dominates the rest of the world. For whatever Russia and China and others may think, they still have to participate. The rest of the world runs on the US dollar. 60% of global trade is US dollars. I think the US is going to continue along just fine.
So you're not in the group that's like, the US dollar is over and Bitcoin rules and America government must learn how to balance its books.
I think the American government it'd be good for it to balance its books. I think it's healthier. Just like if you're an individual and you're spending more than you earn, it's generally not great for you. I think the US dollar is going to continue along fine. And if anything, it's going to get digitized and more easily accessible. The problem is in most of these countries, even if you want access to dollars, it's very hard to get access to dollars. I think demand for the US dollar would be 3-4 billion people, but only a few hundred million actually have the ability to open a US dollar account. That mismatch is driving stablecoins demand.
Now that we've seen the whole arc of it, I'm kind of like zooming into like, like this year, next year. And I think from my perspective, what crypto has done, I'll guess three major moves, right? I'll say, first of all, I think that it's become lighter crypto regulations compared to the Biden administration. And then two, of course, is that I think it has on trade barriers, right? So they've done Liberation Day, tariffs on the rest of the world, balancing the books, right? So trying to cut government spending, using tariffs as a source of tax revenue to increase revenue, and of course they'll inject some tax cuts into that mix as well. But there is, I think, a concerted effort to push towards a bit more of a balancing of the books. So I'm just kind of curious, how do you think that layers on into this conversation of finance and stable coins from your perspective?
Let's take it from the view of the Biden administration.
Yeah.
Look, I mean, there's many parts of the Biden administration people wouldn't like, including the whole woke culture and all of that, which I don't really buy into. But I have no idea why they picked on crypto. You're not really gaining many supporters by picking on crypto, but you're going to lose 50 million Americans who own crypto. I think it was a misinformed targeting of crypto. When you push things so far one way, what's going to happen is the government's going to come in and open it completely, which I don't necessarily agree is the perfect answer either. The middle ground is always the right answer. We're going through this moment where it's almost like a free-for-all. There's some pretty good people like David Sachs. He's shown some early policy, which is just sensible. Let's do things to modernize the rails. Let's have a classification of different types of crypto. A stablecoin is very different to an NFT, which is very different to a cryptocurrency. What do securities laws look like? So I think it's going to go from extreme one end to the extreme other, but I can see with the mix of Howard Lutnick as well as David Sachs there that they will find some middle ground. I think David Sachs is doing the crypto part and Howard Lutnick's doing the general macro part of this message about how to rebalance the US economy. And it's going to go through some friction, frankly. And we're seeing it already, like markets are down. I think I was just looking this morning in the last 6 weeks, Nasdaq's down 21.5%, 22%. So, they're going to react. But I don't think the tariffs in the end are going to be as bad. I guess just the Trump method of like going out. If you're the US economy, you can. You can put a tariff on anyone and be like, well, you need our consumers, so let's negotiate. And I think that's just the way he does things. But if you look back in 2-3 months, things will soften up. Last time he came in, it was a similar path of like things got really bad and then people negotiated, things weren't so bad. I think it's both. People have also missed that they're just looking at the economic play. They're forgetting that there's also a power play as well. If you look at Trump as a person, forget about the economics of being president for a second. He grew up outside of Manhattan, was not respected in Manhattan. He came into Manhattan, business people didn't want to deal with him, and then he proved to them who was going to be popular and build the tallest buildings and all of that. So he's always been an outsider. He's always been there to prove the chip on his shoulder who can be boss. It's going to create friction and then people will settle and the tariffs will be there, but it won't be as bad as people think. And then we'll move forward.
Yeah. And I think this is interesting because this is a negotiating starting point for Trump. Tariffs can get better, but through negotiation, it will get worse if they fight each other and retaliate. When you think about all of this, is there any advice you give for people who are worried? This is not financial investment advice, but I'm just kind of curious how people think about it. There are people who are, very anxious about the world, so they want to go buy gold and be ready to run because there could be a world war happening. I mean, it's
I don't think
one at a
anything.
scale, but I'm just kind of curious.
I think we're approaching near maximum fear in the next week or two. And then I think things are just going to get better from here. I was looking at some companies today that are pretty much on fire sale prices. If you're a long-term investor, I think you can pick up some high quality companies at very fair prices you probably haven't seen for a while. Earnings have got better over a couple of years. Prices are off 20-25%. So I think things will be fine.
Yeah.
If you're a trader in some of these countries and you've got to export, your life is a little bit more uncertain. It's going to be difficult if you're selling goods. But I just generally think most governments will be sensible and will fold. And I think we were talking about this in the pre-podcast piece. I wouldn't say the Trump administration's calculation of tariffs is 100% correct. They put up this big chart that showed the implied tariff, which is the tariff plus the implied tariff through currency manipulation and other methods. But their point is correct. We know for sure that pretty much every economy in Asia is managing their currency against the US dollar to make it better for them to export, almost universally, but barring a couple that have more floating currencies. Yeah, I think from the US perspective, it's like, come on, guys, we're not putting huge tariffs on you. You're manipulating currency so you get a better deal from us. We need to rebalance this. It's just like that person who gets used and used that eventually they break. There's a section of the US business and economic community that feels they've been used by the world. They would have that issue with Europe saying, hey, we're fighting your wars. Why do I care about Ukraine? Ukraine's on your doorstep. Why am I fighting your war for you and spending money? Why are we allowing these countries to manipulate their currency to sell to us? I think overall the thing is, though, that the US is a pro-business country. As much as there's people exporting to the US, there's also people in the US who are working with people overseas to make money. They can only push it so far because there's going to be people who are disadvantaged in the US as a result. That will create a natural equilibrium. Things will fix themselves. I think it's going to come sooner rather than later because stocks can't keep going down with like the administration not caring at all. Eventually they will care and go, okay, we have to back off a little bit here because it's too much.
No, I do believe that what you said is true, that there are many folks in the Trump administration who are smart, savvy, and understand macroeconomics. And I think it's also true that a lot of Southeast Asian economies have been focused on being exporters to the US. So I think when I look at some of these countries, I mean, we're looking at Indonesia, Vietnam, Thailand, for example. All of these countries actually have been hammered by very significant between 30, 40+%. And I think it's an interesting sense of and rationalization. So I think the rational logic is like what you said is like, hey, they've been exporting to the US historically. And I think that a lot of people will say that's what Americans have wanted. So they're doing it for them. It's like a divorce. Like, whose fault is it versus a no-fault divorce in that sense.
Yeah.
But of course, they've been busy exporting. Indonesia is exporting minerals and other stuff to America as well. Thailand is doing electronics and manufacturing. Vietnam as well, textiles and so forth. So I thought people would say, and I've heard from my friends there, they're like, hey, this was the American contract. This was the deal we signed, was that we manufacture you stuff, you buy stuff that's cheap for your middle class and your lower class, and we buy US treasuries to support a weak currency, and then you use that currency to, spend it on infrastructure or R&D or investment, or whatever way you want to spend it.
It's like the guy who is in a corporate job, who has a friend who's a comedian who has no money, but he's a really funny guy. You get a lot of value from him because you're in a boring corporate job. You can say, hey, let's go to the bar. The guy doesn't have enough money, so you're paying for drinks. Yeah. You pay for drinks because he adds value, right? And he's the fun friend to be around. Your friends are all having a good time. Yeah. And then one day, you're like, oh, he's not as funny anymore, and I'm sick of paying for drinks. Yeah. That's what's happening. Okay. That's the analogy of what's happening. It's not the unsaid contract. Yeah. Was there. You make a lot of money, you're in a boring job, you want to have someone come and entertain you. Yeah. But at some point that balance is wrong. And so now the US is saying, yeah, please come and hang out, but buy some drinks as well.
It's the path forward for these Southeast Asian countries who are net exporters to America, like Vietnam, Thailand, and Indonesia with relatively high tariffs. Singapore is very low at 10%, and they have a surplus with the US. What do you think? Stop selling as much to America, buy more American stuff, export to the rest of the world?
The best cue for them is to do what China did, which was like stimulate local demand modernize your economy, diversify it into other areas such as services, right?
Yeah.
The problem is that some of these economies, not all of them, have been doing just like, okay, well, we just got huge amounts of labor, and so let's just like manufacture goods and not really spend much time on the rest of the economy. So I think in some ways it could focus their mind to be like,
Right.
okay,
Yeah.
like time to get on with like sorting out the rest of the economy. These countries are not small, right? I mean, like Vietnam's 100 million people, Thailand is close to 100 million, Philippines around there as well. They need to build better infrastructure, have less corruption, run better government, do all the basics. They have economic growth they can do outside of just selling goods to America. They just got to get their house in order. Selling to America is kind of like the easy one because the friend's always going to buy him drinks. Now the friend's not buying him drinks. If you're not as successful anymore and not as funny anymore, you've got a job. It's the same. That's the way I think about it. These countries are fine. They can have a good, strong local economy if they wanted.
Well, I think that's really interesting because it sounds like your advice to these countries is, yes, it's a crisis, but the party has stopped, the music has stopped, and there's an opportunity to restructure your economies, which is going to be very painful because, I mean, it's hard for economies to turn on a dime and get us going.
China's been going through this for a while. And even though China is like, oh, this is annoying and bad,
Right.
it's not like ending for their economy.
Right.
They're like, oh, well, we've become a lot more self-sufficient and operating internally a lot more. It's going to be painful for these economies, but I don't think it's going to be as painful because eventually they'll negotiate something better. It'll make them look internally at the resources they have. These countries have young populations with very smart people where you can develop a very strong services economy. Hopefully, they focus on those things.
Yeah, and I guess the other side as well is your push of the non-US economies that have been hammered by terrorists to integrate with one another as well. I think EU had a lot of agreements that were paused because they could never get over the finish line, and a lot of them got approved.
Very quickly.
Very quickly after Trump was known to be coming into the US administration again. And I think China continues to be making positive movement towards free trade agreements with the rest of the world. So interesting. I'm curious from your perspective. I know you're against the asymmetry, or you think it's understandable that if there's asymmetry in the trading relationship between the US and net exporters, there's a correction. Do you believe that lower trade barriers on average are better?
I personally do, because it goes to my economic thesis that you should have an open world and an open economy.
Right.
So it doesn't matter where you're born or what passport you hold, and the world can trade freely on the internet and otherwise. So that is my fundamental core belief.
That's
my core belief.
Yeah.
The US is saying to these net exporters, you're not net exporting naturally, suppressing your currencies. If you let the currencies float, the easy answer is just go, okay, we won't have trade supplies. We'll let all these currencies float. That's like true global trade. You don't hold capital controls and you let your currencies float.
Yeah.
Easy.
Yeah.
Easy answer. Singapore manages currency a little bit. It has much more open trade and it has gone through its issues over time of managing the good and the bad of the global economy. But I think today, the reason it's rich is because it has just faced these problems front on and been forced to modernize the economy every step of the way as a result, even through the recent, surge of like, well, we've got limited land mass, we don't have as many human resources, so we have to automate a lot more things. Necessity causes you to modernize. Fundamentally, the world should be open, but the problems today are because both sides are making an error.
Right. And your perspective is the asymmetry be corrected in the short term, and then your hope is that a more symmetrical, higher set of tariffs will eventually drop down over time.
Yeah.
Which is going to happen in the next 4 years within this administration.
Let's see.
Let's see. By 2040, that's far enough for lots of things to happen.
A lot of things will happen.
And then we'll circle back in 2040 to see how these scenarios are panned out. We're living in a better world where global users can use crypto and rails to do transactions, and the world is flat on average. On that note, thank you so much for coming and sharing your experience.
Thanks for having me. I know it was largely a macro discussion, but I've really enjoyed it.
Thank you.
Thank you.
Thank you for listening to Brave. If you enjoyed this episode, please share the podcast with your friends and colleagues. We would also appreciate you leaving a rating or review. Head over to www.bravesea.com for member content, resources, and community. Stay well and stay brave.